Folks, yet again, they said it couldn't be done in this market. But here we are with Meta Platforms, otherwise known as Facebook, as you might know, up nearly 19% in after-hours trading after reporting earnings. They said it couldn't be done. This was a stock that was in the absolute dumps. Year-to-date, the stock was down nearly 50%, and it was at its 52-week low, right? 52-week high was all the way at $380. Yet we were sitting right down at the $170 52-week low. What a sad, sad time. But here we go, folks. 20% gain nearly after hours. We're back over 200, baby. We're coming back. So there was some negativity throughout the day. We saw, obviously, a 3% loss in the middle of the day as Google reported some lesser than expected earnings last night in terms of profitability. So that kind of rippled its way down into the other companies that make majority of their money off of ads. Facebook took a hit. They did today. But here they go after hours saying, I don't care. The only way this stock goes up, folks, is if they beat on profitability. Because if this company missed their profitability mark, which there was a lot of concern that they would. A lot of preliminary reports said so. In fact, Bloomberg reported a bogus preliminary report that made someone a lot of money that had some put options on Meta throughout the day. No doubt they did, because the stock fell around 6% very sharply and then rose back. So someone made some cashish really quickly today off of fake news. But as a result here, we see positivity for once, and really in the last time we've seen positivity in 6 months for Facebook. Good grief. We needed this. Let's take a look at these earnings and see what's going on. So they reported, as we could have anticipated, a GAAP EPS of $2.72, which is a beat by 17 cents. Now, you got to consider this is still quite a ways off of what they reported last year. But in my perspective, I like it a lot. We're talking about a nice beat here. Nothing too concerning in my perspective. I like it a good bit. Now, from a revenue perspective, look, I get it, folks. $27.9 billion, an increase of 6.6% year over year, is a miss by $310 million. The company missed on a revenue standpoint, which they never do. They've literally never done it. They don't miss on revenue. But here they did this time. And I think that's okay. All things considered, folks, the profitability was what investors were looking at this time. We'll be okay with that. Some of the data, obviously, we like to look at the charts for this, but family daily active people up 6% year over year. Family monthly active up 6%. Daily active users up 4%. Monthly active up 3%. They continue to grow users. It's hard to believe it, but they still keep doing it. They expect 2022 total expenses to be in the range of 87 to 92 billion versus the prior outlook was 90 to 95, so that's why this stock goes up as well. Less expenditures expected. That is massive, right? That is massive when you're talking about a profitability standpoint. Total capital expenditures in 2022, including principal payment on financed leases, to be in the range of 29 to 34, which is unchanged. But this overall total expenses line, pretty nice to see. I don't know where they're cutting that $3 billion, but we'll see off the top and bottom there, but we'll see. As a result of these earnings, though, you can see positivity throughout the sector. Snap increasing, Pinterest as well, which showed positive numbers too. Google even saw a little bit of positivity in the after hours so far. So good for those companies that are making money off of ads. Here we go. We're going to look at the financial report here, this press release first, and then from there, we're going to take a peek at the slides. We love the slides, okay? Facebook puts a nice slide together, okay? So, total revenue, as you see, a 7% increase when you're looking year over year. Nothing significant there. Total costs and expenses, though, did rise 31%. Pretty significant. And I see most of this is going to be when you're talking about the Apple privacy changes. This is hurting Facebook. It really is. It's hurting the ad business to an extent. When you talk about a profitability standpoint, because you see the income from operations declined 25% and net income shrank 21%. Now, I will say, this is still a company I love when you look at a profitability standpoint, we're talking about $7.5 billion of net income off of just $28 billion in revenue. 1/4 of their revenue is coming right back to them in just absolute cash, baby. It's nice to see it. It really is. So, still a number I like quite a bit. We saw the number of daily active users. Ad impressions and price per ad. This is actually a pretty important characteristic because this price per ad is kind of how they raise money. Even if they don't grow users, they can really grow money if they increase the price per ad. Ad impressions delivered across the family app increased 15% more ads, people seeing 15% more ads. Screw these ads. I hate there's too many ads. But the average price per ad decreased 8% year over year. You have to consider that. And there was a lot of concern when you look at ad rates that this could be the case coming into a recessionary type environment. Companies will not be willing to pay as much for ads. So there's a chance there that could be an impact here. As far as share repurchases, they repurchased $9.39 billion dollars of shares in the first quarter, pretty significant. And they still have $29 billion available authorized for repurchases, which they should be buying the heck out of stock right now at these levels. Okay, it's cheap. One thing I did want to point out is this headcount line. You can see where some of the profits are getting eaten away when you talk about headcount coming in 28% year over year, an increase. Now, revenue only increased by, that's right, 6.6%. So how are you going to increase your headcount by 28%? It's all about content moderation, unfortunately. And because of that, you're going to see an impact from a profitability standpoint. You have to consider that because these are positions that aren't really going away. So they're going to have to really make up for it by getting more revenue, folks. This is a nice outlook here. Obviously, total revenue for the second quarter I expect to be $28 to $30 billion. Not anything crazy there in my perspective. I don't think that's anything bad. I don't know. So I mean, I'm perfectly okay with that revenue line expected. For sure. Yeah. That's what I'm talking about, folks. So then obviously we talk about the conference call. But I will look at the balance sheet. Then we'll look at the slides real quick so you can see some of the better data. I mean, there's some good data on those slides, folks. Total current assets on this company. It's a 3-month comparison. So how do they change 3 months? Not going to be, the world's biggest change, I wouldn't presume. But you see they definitely decreased their total current assets here, 59.2 compared to 66 billion. I'm going to forget all these in a row. I think they did that on purpose. I can't invest in Facebook anymore because of those numbers. But total assets in general came in at 164.2 compared to 165.9. So we're seeing around a really $1.8 billion decline in assets here. Obviously, the majority of that came from the total current assets, while long-term grew when you look at property and equipment. That was a position that grew quite a bit for them. Total liabilities, I'd expect to see a decline here when you're considering the total current assets decline. Typically, that's because they purchased either some of these long-term, which I think they did in this property and equipment line, but I also believe they purchased away some of that debt. We'll see if that's the case. Total current liabilities, not really much has changed here. 21 compared to 21.1, so slight decline there. Around 50 million, which I say slight decline, 50 million. I'm retiring right now if I have that, but still for them in their perspective, that's nothing really. And total liabilities at 41 compared to 41.1, not really much decline there either. So look, for once, this is, I think, the first time I've ever seen shareholder equity decline for Facebook, but it is still at 123 billion compared to 124 of the year prior. Right around $1.6 billion less in equity. But let's just keep this in mind. 3/4 of this company's balance sheet is equity. It's a ridiculous amount of money. This company prints money like no one's business. Let's look at these slides real quick, and this is what I like to see. This is a great one here when you talk about advertising revenue by user geography. We saw rest of the world saw a decline. Asia Pacific decline. Europe declined, but if you look year over year, obviously, increase. That's what's a more fair comparison. What didn't increase? Oh yeah, folks, Europe did not increase, and slight increase in U.S. and Canada. So, yeah, revenue by user geography in millions. What? So overall revenue, which is nice to see too, that includes the other segment, equated for around $1 billion, as we'll see that. Here's this other revenue line. Obviously, this is one segment that I'm a decent fan of, folks. Oh, actually, never mind. The Reality Labs revenue. Sorry, this is one that I guess they added this into their as a new segment. It was just considered in the other before, but the Reality Labs revenue, it's been pretty consistent. Not necessarily a specific pattern to it. Most recently, $695 million from them. And that includes, obviously, the Oculus, as well as eventually their Meta platform will be on there as well. Metaverse platform. Interesting stuff, folks. That's all I can say. It's interesting. But it did increase year over year, technically, in every segment here. Please, folks, please forgive me. Please forgive me. But here, you look at the operating income line, and you can see quite a big increase in loss from the Reality Labs segment. So that's something to be concerned about, but they're spending a lot on this in terms of development of not only Oculus product, but the Metaverse. I mean, this is a huge thing that they're buying into big time, and frankly, I think it's going to be a big thing in the future. People don't like physical interaction with people. The Metaverse it's unfortunately going to take over. As a citizen of the world, I don't want it to, but look, let's just be clear with each other. We know how people are. They're so antisocial, they'll only communicate via the internet. So this is just a fact. Fact of the matter. And you see research and development has taken up a much larger percentage of their expenses than it has before, and that's because you see this research and development going into, that's what I'm telling you right now, into the development of the Metaverse projects, folks. That's what I'm talking about. What else do we have? A net income line. Still, look, it's a little bit down, but this is a company that produces a lot of net income. Still way higher than it was in this 2020 line. But look, I like to see it still. I feel confident about them. I do. Capital expenditures, if we're being clear with each other, definitely an increase there. And it's not shocked. Again, I'm telling you, they're going to be spending a lot more on this research and development line. Keep it into consideration. Family daily, look at these charts. This is the charts I love. Monthly daily active people, family average revenue per person. That line is really just slightly down, relatively flat. But overall, you see an upward trend. I like to see that. Daily active users, oh yeah, continuing to grow. Oh, monthly active, it's growing. Average revenue per user, overall worldwide, you saw an increase in average revenue per user. Some segments where you didn't see that would be the Europe line, as we spoke about before. But that's it. That's it, folks. Everything else saw an increase in average revenue per user. You see U.S. and Canada massive, but with the regulations and stuff they have to worry about with these other countries, you see how the average revenue per user declines quite massively. But that's what I wanted to talk about with Facebook. I wanted to show you that. What do I think about Facebook? This stock was trading at a 12 PE ratio prior to this. This is a dirt cheap stock. Even after this 20% gain, this stock is trading under 20 PE ratio with growth that'll be close to 10% consistently for the near future and potentially even higher after that once they get the Metaverse in play. Market cap, keep it into consideration. It's going to be trading over $500 billion with an annualized revenue this year close to $95 billion. Still dirt cheap when you're talking about a price to sales around 5 to 6. I think it's dirt cheap. This stock is worth a buy if you're into the long-term investment strategy, folks. Have a good one.